the Market Musings podcast. Well, hello and welcome back to the Market Musings podcast here from Stockbox, where today we're joined by Igraine CEO David Levis and, of course, co-host Dan Flynn. Welcome to you both. David, how are you doing, first of all?
Very well, thank you. Yes, we've got a nice sunny day here in Cheshire, which makes a change. So, yes.
Good. Well, yes, we've had this unseasonably warm early March, which is nice, actually. I was in Berlin last week and it was beautiful. But Dan, How are you?
Yeah, all good. Trying to keep on top of everything in the markets at the moment. There's definitely no shortage of news flow, is there? Keeping us busy.
Yes, news flow and excitement. Yes, thanks to our US friends. Yeah, exactly. Yeah. If one could be a fly on the wall in the Oval Office, one could probably make a fair bit of money. But trying to predict and act on this is not easy, but it's not nonetheless exciting. But anyway, we're here to talk about something a bit different today, but also quite topical, considering what's going on in the UK with the infrastructure for the energy that was only on the news this morning. But David, of course, for Igraine and what's going on with Igraine with the big push with the battery storage effectively, before we get onto that, and that's where your wealth of knowledge is, we like to start off these podcasts just learning a little bit about the people in the business. So, we can sort of hand the floor to you for the first 5 minutes or so. You can go back as far as you like, university, or you can go back even further if you like, and really what you studied, what your interests are, your early careers, some things that you've perhaps learned along the way, whether it was through successes or indeed failures, experience in the markets, experience in the industry, all that kind of thing. We'd love to know a bit about David. So feel free to go back as far as you like and give us a bit of a potted history of yourself.
Sure. I actually started out from school on a training program, as a trainee with British Aerospace. And having finished a couple of years in the training school, went into aircraft design. And I was with Aerospace for 15 years, I think in total, 10 years, as an aircraft designer, which was incredibly exciting. And I had the opportunity to work on some fantastic programs, such as the Airbus A340. I did the leading edge design from the 3D modeling for the A340 between the engine pylons. I worked on the Ariane rocket program. We had a very interesting program where Ariane wanted to increase the payload in the nose cone. So they asked British Aerospace to look at using carbon fibers, which had never really been used in aerospace products at that point. It was a fairly new material. And I was working in the structures and materials lab, and we were asked to do some testing to lay up carbon fibers in different layups and do some destructive testing on it. So pulling these layups apart to find out which was the best layup to use. And that information was then fed back to Ariane, and they built a new nose cone out of it. It was called Spelder was the project, but it was a fabulous project to be part of, very exciting. And then after that, I went into design with independent companies that would supply to British Aerospace, and did so. I worked down at Marshalls in Cambridge for a while, GED, Giltsburg, the old Giltsburg company, for a while, and in doing that, I set up my own little limited company, and I got more interested in the corporate side of that company than actually aircraft design.
Really?
Yes. So that led me into a job at BDO Stoy Hayward Corporate Finance to try and learn a bit more about the corporate side, the financing side of business. And I worked with a quite dynamic team there in corporate finance in Manchester for a couple of years, and then progressed from there to KPMG Corporate Finance, where we had a very large team which incorporated the whole of the Northwest, really. So Stoke, Preston, Liverpool and Manchester. And those two roles with BDO and KPMG were really critical in helping me to understand as a non-accountant, helping me to understand how deals are structured and how corporate funding works, and how the markets work, and how funds are raised on the markets. And so after 5 years with KPMG, I was approached by one of the companies that I'd raised some funds for to go and work in their team as a board level director, and try and look to raise sufficient capital on what was the OFEX, the old OFEX market, which of course is now Aquis, where Igraine, our company, is.
Okay.
And that was a very exciting time. So we took this tiny little company that had been spun out of from ICI, some technology we took out of ICI, and it was in structures and materials. So it was a sector that I'd already worked on with my aerospace days. And we had a very high temperature material that was particularly good for braking applications. So, and it was with modern aircraft brakes, they use a material called carbon, which is extremely good once it gets hot. It's got a very good coefficient of friction, but it's appalling when it's cold. And steel brakes, of course, are the reverse. They're very good from cold, but they're not very good when you get them very hot. So you've got these two conflicting materials that actually carbon is used in Formula One and high performance sports car racing. And it's one of the reasons why they do a formation lap at the start of Grand Prix, is to get the brakes hot. Otherwise, they'd all go barreling down to the first corner and straight onto the scene of the accident. They wouldn't have any braking. So we developed this material where you take different metals and different compounds and impregnate the carbon matrix to create a carbon silicon carbide, which then gives you the best of both worlds. So you have good coefficient of friction when it's cold and also when it's hot. So now you have a material that's almost like a Formula One brake, but you can use on a sports car, on a road car, and it's going to be sufficient braking capacity when it's very cold and a nice winter morning. So we took that company, we listed it on OFEX, we raised some funds in a public issue, and then we took it onto the AIM market, and it's still going to this day. Surface Transforms, it's called, and it's still going to this
Transform.
day. Okay. Yeah. So that's how I got into the fundraising market and OFEX and Igraine and Aquis.
If you can just bear with me for a moment before we talk about that, I'm a big fan of sort of aircraft and flying and all that kind of thing, and that's really fascinating that you worked in that space. I had a question that popped up. You said you worked on the leading edge. Are they not all the same, leading edge? Are they all different per aircraft then? Because you've got like the aerofoils principle is the same, isn't it?
The principle is the same, but every single aerofoil from aircraft type to aircraft type is different.
Right. Okay.
Yeah, and it's quite it's people are always amazed how do those great big heavy metal circular, boxes essentially stay in the air. And the principle is actually not that difficult. And it's based on Bernoulli's principle. And what you've got is over the surface of the aerofoil, so the top surface is more curved than the underneath surface. And when airflow hits the front of the aerofoil, it separates. So some air goes underneath and some air goes over the top. Now, the air that goes over the top, because it's a curved surface, because it's further, the molecules essentially spread out, and it causes a pressure drop above the wing. And that pressure drop, the faster you get, the more that, or the steeper the angle of attack, the more that pressure drop increases. And so you get what's called lift. And the air underneath the aerofoil can sense that the air over the top of the aerofoil is now less pressure, and it tries to move up into that gap to fill that gap. It's exactly what happens when you get wind. You've got low pressure in one part of the country and high pressure in another part of the country, and the air tries to move into the low pressure area. That's what happens with the wing. So the air underneath tries to push up into the space on top where it's low pressure, and that therefore creates a lift on the aerofoil.
Yeah, so the airplane is literally being pushed up.
Yes,
from the air.
Absolutely. And each aerofoil on each aircraft is designed to do different things. So a high-speed aircraft will have a completely different wing profile, different wing shape to a low-speed aerofoil. And the way you design it is you take what you think is the right shape of aerofoil wing, and you put it through some diagnostic testing, and it's all done on computers these days, rather than wind tunnels. You still use wind tunnels clearly, but all the initial work's done on a computer. And when you get the results of that, you can then tweak that aerofoil shape and tweak your aircraft shape until you get the optimum for the job that you're trying to do with that aircraft. And so then you end up with a 3D model, which you then send out to the design house, and the design house takes that envelope and creates the metal or the fiberglass or the carbon fiber structure that wraps around that envelope. And that's how an aircraft is designed.
Yeah. Well, let's move on because we're not here to talk about planes, which would be great. I'd love to do a podcast all about aircraft. But I do find it fascinating that you went from effectively what is obviously a love of sort of, I guess, aviation or, design anyway, certainly with flying. But you found the corporate side quite interesting as well, like completely different. Yeah. So, I mean, at KPMG then, so one of the roles you had was effectively, they're obviously a huge, in simple terms, accountancy firm, but I guess they have a far bigger remit than that, which, as you say, involved actually raising capital and assisting companies with IPOs. Yeah,
it was. I thoroughly enjoyed my time both at BDO, Story Hayward, and at KPMG, and I was surrounded by some extraordinarily clever people. And my role at BDO and then at KPMG was slightly different. So at BDO, it was pure corporate finance. I was a junior, person in the team, really supporting the senior members of the team. But I did it I took that step because of course, at that point, I'd already been a director and owner of my own companies. But I took that step back in seniority, if you like, deliberately, because I knew that I needed, if I wanted to get into, as a business owner, if I wanted to get into deal making and the sort of corporate finance type of world, I needed skills that I didn't have. So I understood about bookkeeping, I understood about running a business, but I didn't understand about how you put deals together and how companies are valued and how you structure. Didn't know any of that. So that was the whole purpose behind taking that step down in seniority and closing my company down and stepping into corporate finance. And I had 2 really good years at BDO that gave me a very good grounding. And then when I went to KPMG, the role was slightly different. So I was head of a function that supported the deal teams with research and analysis, as well as helping on the occasionally with M&A work and actually putting deals together. And we did some big defence work as well for a couple of very large PLCs. So the work at both organisations was slightly different, but very focused on corporate finance, and it was very enjoyable. And I got the benefit of 7 years in total, learning from some very clever people how you put deals together. That then led me to, when the opportunity is right. And one of the companies that we'd been working with in-house, that I'd actually run a corporate fundraising for, they were looking to take the next step, and they were looking at raising funds on the OFX market. And by that point, they asked me to, did I want to go and join them? And at that point, I thought, okay, the time is right now. As a non-accountant, I'm not going to go any further in KPMG. I'd reached, a manager stage at that point, but I was never going to get further than that, because as a non-accountant, you tend to get overlooked because you've got brilliant accountants and the such like coming through. So I thought now's the time to step back out into industry again. And so I accepted a role on the board of that ICI spin-off, and it went very well. It was thoroughly enjoyable.
So that process, then, so you really enjoyed that raising that money and effectively assisting with that IPO. I mean, that was your first effectively public board role, I guess, then?
Correct, yes. And that, again, was a very good learning experience, because by that point, I'd run companies. I'd run a small company myself. I'd got the corporate finance knowledge now that I felt I needed to be involved, at that level on a PLC board. And it was a young company, and it was finding its own feet in itself. So it was the timing was great, because to be part of that, to be part of a fundraising, going onto a market, learning how markets work from the point of view of a company, and being involved on the other side of the table, if you like, from the corporate advisors. That was a very interesting experience, and again enhanced my knowledge of how corporate transactions work now from the company side rather than the deal team side.
Excellent. And then, did you have any subsequent board roles after that then?
Yes. So that was a two-stage process at that point. We went on to OFEX first, but I learned quite quickly that OFEX is not everyone's cup of tea. And what I mean by that is that there's a lot of institutional funders don't like those junior markets. That really the most junior market they'll go to is AIM, and they won't really go much beyond much further than that, which I always think is a real shame, because if you look at OFEX and now Aquis, which is what it's now become, its current incarnation, you get some fabulous companies on there, and you get some fantastic opportunities. There are some really innovative companies coming through on that junior market. And I think if some of the institutional funders looked more carefully at that market, they would find good opportunities that they would be able to invest into. I've always been a bit of a champion of it. I've always liked it. And I was quite pleased with the opportunity with Igraine to go back to that market and try and grow Igraine, up through Aquis with what we've got planned.
Is there anything you think those smaller exchanges can do to put themselves on the radar of those larger investors, or do you think it's just a symptom of markets at the moment not being as strong as perhaps they have been?
I think it's the risk averseness of funders, which you can fully understand. Nobody likes to, none of us are in the business of trying to lose money. We all want to be successful. We all want our shareholders to see their investment grow, because that means the company's growing. And if you take a steadier approach to that as you can, then hopefully the company can grow. But I think it's difficult for investors, because a lot of those investment companies are just not able. Their internal rules and regulations don't allow them to invest on those platforms, because they're seen as unregulated. They're seen as not as being not a genuine public market, which of course it is. And I think that if they could do something with the regulations to allow those institutional investors to take more of a look at the likes of the Aquis market, I think it would benefit, especially in the UK, because we're really innovative in the UK. We have some very intelligent people looking for investors, and that's one of the most tricky parts of being a new business. It's getting that initial seed capital, call it seed capital. It's getting that initial investment in. That's tricky. And I think Aquis is a great platform for that. So if we can somehow come up with a mechanism that allows investors to look at that market, then I think that it will benefit both the investors and obviously the companies themselves.
The trouble is with we were talking about regulation, and the Aquis is a great exchange, but like you say, it does lack that sort of liquidity, perhaps because of the regulation. But then you've got what I would consider perhaps over-regulation, perhaps in AIM, and that seems to be, as we know, over-regulation stifles growth.
Yes.
I mean, I think it's, what is it, about $500,000 a year at least, total, I think, to list on AIM at the minute with everything you've got to do. Yeah.
It's very expensive, and that has to be taken. So if you're raising $1 million or a couple of £1 million, which is not a huge amount of money, to have a third or a quarter of that go in fees is so you don't see any benefit from that. The company, or what the company gets, is essentially a badge to hang on their door to say we're now part of the market. No, okay, that has benefit, that has advantage, and there is a value added to the company by virtue of the fact it's got a listing clearly, but the company doesn't see any tangible benefit itself from that, because that money that it raised to cover those fees, it can't use then obviously to do what it wants to do.
Yeah, exactly.
Whatever industry it's in.
Yeah. Yeah, a miner told me, I won't name the name, but I was told by a mining company, one of the directors, that you raise £1 million on AIM. Well, you've maybe got 300 grand left to go into the ground after you've paid the fees and you've paid your staff.
Yes. Yeah.
It's not surprised that IPOs have sort of reduced massively in recent years with that in mind, is it?
Yeah, I think what's interesting is that if you've got to be careful about liquidity. We on when we were in OFX with Surface Transforms, we were very fortunate. We had a good broker, and we were very unusual in that we did a public offering and we had amazing liquidity, but spread over an enormous amount of shareholders. So we had a genuine share price that reflected market sentiment, which was incredibly unusual for an for an OFX company. Our profile was very similar to a large full list company. It was very, very unusual. And if you look at the way we are now with Igraine, where we have a very, very tight shareholder pool, 77% is held institutionally or with management rather than with the public. I think you need that now on these junior markets, because you want to avoid the sort of ramping that the markets have been accused of in sort of years gone by, and you want investors, institutional investors, if you can get them, that are sat alongside you, that are going to be there for your growth over the next 5 or 10 years. And so having that much smaller liquidity, public liquidity, and having institutional and investors alongside you is much more important, I think, these days, because you need the support of those investors as you go along. Because going back to market with public offerings is probably a little bit more difficult. Whereas if you've got investors that you can keep in touch with, institutions, then they can support you with future fundraisings and be confident about what you're doing within the company.
Yeah. When it comes to building those long-term relationships with investors, do you find it helps with Igraine and Gem Energia being in a sector like battery energy storage that is going to emerge increasingly over the next 10 years? I mean, it's here to stay, isn't it? And you want to be an early mover.
Yes, I think that's true. I think Steve and Simon, my fellow directors, saw the potential upside that we can, we aspire to. And they were bought into the idea relatively quickly. So then we just had to find the right vehicle to do the deal in, and Igraine was the perfect party. So it brought the perfect solution to what we needed. We've now, you're quite right, we're at a stage in energy infrastructure in this country where battery storage is rightfully recognised as being critical. If you've got most of your energy being produced by renewables, you don't have a choice. Battery storage is critical because there's no point in us producing electricity in the middle of the night and wasting it because we're all asleep, so nobody's using it. It's far more efficient to store that energy and deliver it back to the grid when it's needed. So very definitely, if you've got renewables as a large part of your product, your energy mix, you've got to have storage. And not just battery storage either. Typical lithium-ion batteries is considered short duration, but we need long duration energy storage. So the sort of thing that you see with hydro, that you see with air systems, you need long duration as well as the short duration that we typically refer to as lithium-ion storage. We're going into a position now where batteries bring something to the grid that as we've said, is critical. You cannot run energy systems without battery storage. It's impossible.
Yeah, and I mean, this has changed recently with battery tech because we've always had this issue, I suppose, where when we were generating power, which would have been coal. I know the UK is, I think, pretty much off coal now. I might be wrong in that assumption, but yeah. I mean, the energy was just literally wasted in the night. Was it what, just sent to Earth? Where did it go?
Well, it's even worse than that because at times you get curtailment coming in where energy suppliers, so turbines mainly off the North Sea, are actually paid to not produce, and
right.
because they've got PPAs, they've got contracts in place to supply electricity to the grid, and so at times when we're overproducing, they're paid to not produce electricity, which is it's bizarre. Now you can start to see why battery storage is so critical. We can't guarantee when we're going to produce the energy. You can with a coal-fired power station, you can with a gas-fired power station, but clearly they're not very good for the environment. So moving to renewables is exactly the right thing to do. But in doing so, you take away your ability to predict exactly when you're going to produce electricity. That doesn't help us on a cold winter night when we all get home and the sun's not shining and there's no wind in the North Sea. That's where your batteries come in. So you can charge those batteries at night and during the day while we're all at work, and the country's not using quite so much electricity, and then deliver it back to the grid in peak hours. And that means that all the energy that we are creating that would otherwise have gone unused gets returned to the grid. That actually keeps our costs down because we're not paying curtailment costs then to produce electricity.
So you can throttle back like a traditional power station at night, like a gas or a coal. You can throttle them back, but obviously you can't control the wind, so you just put it into free wheel, I suppose, or feather the blades, and it's just sat there
exactly
doing nothing. Yeah, right, okay.
And also, there's an issue then that comes in with gas fired, because we've still got gas fired, which is used to provide in times when the wind's not blowing and the sun's not shining. You have to get your energy from somewhere. But so these power stations, gas-fired power stations, are sitting there unused. But when we need them, they're turned on. But turning them on, they essentially get to almost name their own price, how much it's going to cost per megawatts of power to turn on. And we've seen prices in this year where the cost per megawatt that the countries had to pay to turn these power stations, these gas-fired power stations on, is nearly £1,000 a megawatt.
Right. Okay.
It's incredibly expensive, and it's because of the cost of ramping these power stations up. So the more we can take that out of the power mix, the energy mix, by having batteries and using batteries to supply when we need it and the wind's not blowing, or when we need to top up, the better. It will keep our energy prices down.
Yeah. So how far along is the battery energy storage sector in the UK, perhaps compared to, some of the other developed players in the world?
We lead the way. Britain's very good at. We've always been good at bringing new technology forward, and we've led the way in battery storage. We were one of the first countries to see that if you've got renewables, you need battery storage. So we are ahead of the vast majority of countries. There are countries, obviously, that are they've almost caught up. Some European countries have got levels of battery storage now. The US has got battery storage. I read somewhere that the Super Bowl recently was run on battery storage. So, which was, which the entire delivery for that day was run on battery storage. So the US has got some decent battery storage as well now, but we're miles behind where we need to be. So we need at least 50 gigawatts between now and 2050, and we've got about 4 gigawatts currently operational. So there's a lot of battery storage is still required. And one of the issues we've got in delivering that is that we've got an old grid system which needs to be upgraded. So National Grid have just announced a large infrastructure project where they're spending about 50 to 60 billion pounds on improving our grid infrastructure, which will allow us to connect not just battery storage but renewable projects to the infrastructure. It's not just renewable; it also allows us to connect data centers, and new housing, and industrial and warehousing. All these, as we move from fossil fuels to electricity, we need a better delivery system. We need better infrastructure. Think of the number of cars. The government's got a target of getting a third of all the cars on the road electric by 2030. Well, that's only 5 years away. So we need a grid that's fit for purpose by the time we get there. And so getting the grid, I really applaud National Grid and NESO for really trying to get to grips with this. They've announced this big infrastructure spend to get the grid fit for purpose. And there's another initiative they've got as well, which in the very short term, over the next few months, they're pausing all applications for new large grid applications, especially for battery. And they're doing that so they can look at the applications they've got in the system now and properly understand which of those applications can actually get built. So those applications that are never going to get planning or going to be very problematic to get planning, and they'll be now knocked out of the queue, which means that within a couple of months, the queue will be much more streamlined, and decent projects that can be brought forward and can be built will be given a priority over those projects that can't. So again, National Grid have taken the bull by the horns there and are looking to streamline and improve the ability for companies like us to deliver our battery projects.
Yeah, I saw it last month. I think it was one of the Scandinavian investment funds. It invested 800 million into building the 3 largest battery energy storage systems in Scotland. Yeah. So do you think the urgency of this, the need for this transition and for it to happen quickly, is something that investors are now starting to clock onto and have an increased appetite for?
Yeah, very much so. And there's another change there which investors are starting to understand as well. And that is, if you look how investors tend to look tend to want these projects to look. All solar and wind turbine projects are funded really on the back of a large PPA, a power purchase agreement. So the project gets built because it's got an energy supply sales agreement, if you like. That's what a PPA is. It's an agreement to sell its revenue from the income over a 5 or 10 year period. So an investor looking at that can say, okay, I like that solar project, or I like that wind turbine project because it's got a 10-year PPA with Scottish Power or EDF to sell its power. So it's got certainty of income, which investors love. So you get that long-term certainty on income. You don't know whether the wind's going to blow tomorrow or today, but you know over a year, because we've got very sophisticated modelling, when the wind's going to blow on average over that year and how much power it's going to deliver. So investors love those long-term PPAs. Batteries are different, and batteries don't work well with long-term power purchase agreements because they're designed to be charged and discharged within an hour in quite a short period of time. And you don't know whether you're going to be called on tomorrow or the day after. But you do know, so there's a little bit more uncertainty than with a solar project or a wind turbine project. But you know for sure over a year, because we've got very sophisticated modelling that tells us, people like Modo Energy provide this. You've got very sophisticated modelling. They will be able to say, okay, so we expect your battery to produce X amount of revenue. But the way you produce that revenue is through an optimizer trading your energy, so on a daily basis. So our batteries, or these battery schemes, buy energy out of the grid when it's cheap. So when we're not using it, it's like anything in life. When there's a surplus, it's cheaper than when there's a mass need for it. So when the energy is cheap, when we're not using it, batteries can buy energy out of the grid cheaper on the markets. And then when there's a need for power and not enough, they sell that energy back to the grid at a higher price. And that's how batteries make their money. So institutions now are coming to understand that that's how you run a battery. And you don't ask a battery to go and get a long-term PPA, because you're doing yourself out of the ability to make revenue on the intraday markets and the day-ahead markets, which is when batteries can be most efficient and make most of their returns. So we're starting to see now an understanding with institutional investors whereby they are not as reliant on seeing a battery have a PPA, a 5-year PPA in place to want to invest. And that's great because that means now that investors are looking at the battery market how they should be looking at it, which is on a day ahead, intraday trading and using things like balancing mechanism, as opposed to trying to get you to get a long-term PPA, which really cuts down on your profitability.
Yeah.
So how do you sell that idea? Because I presume a PPA is very clear what that is. How do you sell the idea then and sort of show the ROI to potential investors?
So there's two ways you do it. You employ a company, a specialist in this sector, who produce curves. And those curves show what the likely income is going to be and they're pretty accurate. So what they can say with a fairly high degree of certainty what your income is going to be over the next year, or over even further than that, 2 or 3 years out. So an investor can look at that and say, well, actually, I've got visibility over that income stream for several years, which an investor loves, because most standard businesses don't really know what they're going to do more than a year ahead. They might have some visibility, but beyond a year, it's difficult for most businesses to understand where their business is going to sit. Batteries, actually, you can get a couple of years out, but it's much more akin to a normal business. Investors are starting to understand that. So they're starting to understand that we can show, because of the consultancy work that we can point to in our due diligence, we can show what our income stream is going to be like with a fairly high degree of confidence. And therefore, the investor can be more confident in our income streams, and therefore for themselves be more confident that they can invest in that as a business.
Okay. And the projects would be looking to effectively charge within an hour, and then hold that power until it's needed. Do you have any risk of like idle discharge?
No, and it can be longer than an hour. So what's starting to become quite favoured in the industry at the moment is a 2-hour battery. And what you do with that is, so if you've got a connection to the grid, which is say 100 megawatts, so you can charge or discharge 100 megawatts in an hour. What you can do is you can build twice the size in storage capacity. So you can build 200 megawatts of storage capacity, and you can charge for 2 hours up to 200 megawatts then. And then when you want to discharge, you can discharge 100 megawatts per hour, but over 2 hours. So that we're starting to see a trend moving towards those 2-hour charging and 2-hour discharging now, which gives the optimizers who run the batteries on behalf of the site owners, it gives them a longer window to trade or to purchase electricity. Sure. And therefore, it makes the strategies that these optimizers use, they're all blue chip companies, these optimizers. It makes the strategies that they use to manage the batteries more dynamic, and they get more opportunity to make better profits for the batteries, which is important because these are very expensive items. You know, you're talking hundreds of millions of pounds to build out these projects. So that you need to attract that level of investment, you need to be certain that the investor is going to get a reasonable return.
Yeah, absolutely. Now, you mentioned, we talked a lot about renewables earlier, and we can't tell when the sun is shining or when, of course, the wind is. We can't predict those sort of things. Is this battery storage, is it really more focused for the renewable sector? And the reason I ask that is because, of course, nuclear, which I don't know if you class as renewable, but I'd certainly class it as green. How does that fit into it? And the reason I ask that is because, of course, recently we've seen a huge push for green energy, clean energy, renewables, but now that's kind of going out the window. And people are saying, you know what, we're going to be on oil for longer. We're going to start building nuclear power stations, which of course are much better. You can get much more efficient. So, I mean, does it still apply to, like, if let's say the UK, for example, I know they are building a nuclear station. Are the batteries still applicable to power stations such as nuclear?
So what a battery does is essentially take spare energy out of the grid. It doesn't actually matter how that energy is produced, but it's just more pronounced when you've got renewable element to your energy mix. We still need a certain amount of electricity, and that need is getting bigger and bigger. And by the way, with AI, the requirement for energy with AI will grow exponentially. To give you an example, if you look at a standard Google search, the amount of energy that uses, which is it was a passive search. So, you know, you put your search in, it goes out to all the data centers, gathers the information on your search, puts it back on your computer, and you can see a list of all the websites that you can go and visit to get the information that you've just searched on. An AI search works differently in that it goes out to all those data centers and it takes that information and it presents it to you in almost like a written format. Well, this is a written format. So it saves you the need to go and search through all the websites. But the power consumption of an AI search compared to a passive search is 100 to 1,000 times greater. So to put that into context, right now, data centers use between 1 and 1.5% of the entire globe's energy production. That's what we use on data centers right now. If just Google moved on to AI type searches, it would need to produce itself the same energy as the country of Ireland. So it would need the entire energy consumption of a small country to run its own AI data center. Yeah. AI searching, once we go on to, and it's not just AI searching, using AI in daily applications, in science, in industry, AI, once it enters mainstream over the next 5 to 10 years, will consume 10% of the world's energy requirement. That is an enormous amount. We've not even built those into the figures that we need to provide to produce energy.
Yeah. So we're only going to use more, aren't we?
Cars, you've got 5G mobile uses 5 times as much energy as 3 and 4G mobile. You've got heating homes moving away from wet systems, gas-fired wet systems, to electric systems. You've got cooking moving from gas cooking to electric cooking. You've got building regulations changing where you've got to have electric boilers rather than gas boilers in homes. All these things are pushing us to use electricity over fossil fuels, quite rightly, because it doesn't matter whether you believe in global warming or not. It's far better to live in an environment where you're not polluted by carbon dioxide. It's far nicer to have clean air. So and then you've got the global warming issue itself. So we're going to be producing more electricity. The cheapest way of doing that is obviously free electricity, or free energy, which is the sun and wind. It's free to us. And then, of course, tidal as well. So that energy is free to us. And nuclear, whilst it's a good source of electricity, it does have its downside. That you've got the issue of how do you use what do you do with spent fuel rods? It's phenomenally expensive to produce. And it's a huge amount of cost to build those projects in the first place. And the technologies, is quite difficult to get hold of nuclear technology. So wind and solar will definitely be the biggest producers of electricity as we move forward over the next 50 years.
Okay.
The green transition is not just about avoiding those non-renewable sources. It's about actually finding a way to meet the massively increasing energy demands.
Yeah. You need a mix. You need a mix in your energy supply. You can't just rely on one thing. And you need that interconnectivity as well. So we've got lots of interconnectivity with our European neighbours and with Ireland, on one side, and with our European neighbours on the other side. So we're trading electricity all the time, backwards and forwards across the North Sea and across the Channel. We're selling energy, our excess production, to our European neighbours. When our wind isn't blowing and our sun isn't shining, we're buying electricity in from them. Mm-hmm. And so it's not just a case of just using our own resources. We're helping each other. So batteries help to balance out our neighbours' energy supplies as well as our own.
So when it comes to Igraine and everything that you're doing, you're looking to build out battery storage sites effectively. So you've got to identify those sites. You've then got to get permission, presumably, to do it. The applications you talked about are being streamlined, connections to the grid, and then effectively you've got to get money together to build out that site and then give an investment case to investors. So let's get a snapshot of where you are on that process. And I know you've got a few sites identified, and have you got applications in already?
So what we're doing at the moment is we made an announcement, I think it was just before or just after Christmas, that our first site was we'd drawn down funds and we were now moving our first site along, which is in the northwest of England. And that site we are now taking it through its processes to get planning and grid connection, and hopefully over the next months, 12 months, 18 months, we will have that process completed. And then we can look to how we use that asset that we've created then in Igraine. Do we sell it to another developer who will put the funds in to develop it out and produce a battery storage facility? Or do we look then to get our own funds in place to develop our own facilities and hold our projects. And I think that it's probably fair to say that whilst initially we want to stick to the knitting, we want to be producing sites and maybe looking to sell them on, we definitely want to longer term look to how we can optimize those assets internally for Igraine shareholders. So how can we grow ourselves into a position where we're not just selling assets all the time? And I think that's something that we're conscious of. So initially, yes, let's find our sites, let's use our expertise. Got some great colleagues we're working with who are experts in this field. So we've got some very good experience in-house, going out, finding sites, making sure that we believe that they're going to get planning, making sure that we believe we'll get a reasonable grid connection in a reasonable time, and working to get those in place. And then that creates the value in Igraine. We've got sites now that we're hoping that we can bring forward in the not too distant future with updates. We're still a little bit to go on those as yet, but we are working now towards bringing forward more sites. Will be quite exciting to be able to update shareholders when the time is right. A lot of what we do though is, we've got to get out there and we've got to look for the right sites, and it's not easy. Everyone thinks they can do it, but it's not that easy. You've got to go and look at a lot of sites. You've got to go and do a lot of exploratory work before you have something that you feel confident that you can go and put a couple of 100,000 into planning consents and consents for grid connections. We've got to be mindful we're spending investors' money. So we want to give those sites the best opportunity. So we turn a lot away. We do a lot of groundwork before we get a site into a position where we feel confident that we can spend the money and get it through. And we're making progress with that. We can't say too much, but we are making good progress with bringing sites forward, and we hope we'll have announcements fairly soon on that.
So you've got one application now that's is in progress. You've got multiple sites that you're looking to start. Can you say the number of sites you want to start?
We would love to set ourselves. Well, we have set ourselves a target of having at least a couple more sites in the not too distant future, so in the next few months.
Okay.
And then beyond that, we're looking to get ourselves up to 8, 9, or 10 sites that we are operationally bringing through. Now, not all of those will succeed, clearly, but but enough of them we will be comfortable with, that we'll have a really good solid pipeline.
Okay, good. And are you talking 12 to 18 months to get them completed?
So
that's sort of the timeline.
To ready to build stage, a lot of it depends on the grid and also the planning.
Okay.
And obviously that the parameters around planning particularly are quite a challenge, in that you've got to look for. You could have the perfect site, but there can be something wrong with it that means you've got to turn it away. You've got to move on to something else. Is it in an area that's contaminated? If you put heavy equipment on it, because these batteries are heavy, and the substations and transformers that you're putting on site are heavy. If you're putting those on site, are you disturbing something that's under the ground that you don't want to disturb? Is there pollution on site? You don't want to be creating environmental hazard. So there's a lot of research goes into ensuring the sites that we take forward can actually be built, and that's the key. It's not that difficult to go and get planning. It's not that difficult to, well, it can be difficult, but it's not that difficult to go and get a grid connection. But you need to understand that when you've produced that site at ready to build stage, can somebody actually build it and turn it into a battery storage site? Because if it can't be built, then there's no point in going through the process. And we understand a lot about that. So we do a lot of modelling on our projects from the investment point of view. So we start at the back end and we work back towards the planning consent and the grid connection, and we model our projects to see if we produce this site at ready to build, can somebody either buy it off us, or can we build it out, and can somebody make the returns on it that we think they can make? Because that's what you have to do. You have to be confident that whoever builds that out can operate a profitable site.
Yeah. And in terms of advancing these sites, are you finding that you're getting increasing support from regulators and the government to make the process as easy as possible, as the importance of batteries grows?
Yes. That's the whole point about what National Grid are doing at the moment. They've really stepped up here in increasing the spend on infrastructure, increasing the rate at which they're trying to change the national infrastructure that we've got and make it fit for purpose, not just for batteries, but for data centers, for plugging your car in, for cooking on electricity. All of these things need a grid system which is fit for purpose. And then the other point that I made earlier was that they're also looking at the queue for connections that we have right now, and identifying those projects that will never get built, because whilst they still sit there, they're taking a place in the queue. They have a grid connection, but if they can't progress their planning, they're not going to get built, and they're preventing somebody else who came along after them that does have a viable project from getting connected. So those two initiatives are very important and will help us deliver all the infrastructure upgrades that we need, as well as the battery storage that we need over the next 25, 50 years.
Sure.
Yeah. Okay. So finally then, David, I completely get the concept, completely get the model. You're looking to get a pipeline of projects that you can either effectively sell as plug and play models, or indeed look at options to do it internally to maximize value for shareholders. So the final question I want to ask you is, why you? Why should investors trust not just you personally, but you're a big part of this, but Igraine and the team. Why you guys? What's the investment case? Because you're a fair way off from being able to present that sort of arbitrage, if you like, that trading model for the actual trading of energy. So why should people invest? What's the investment case, I guess I'm asking? So
we have a lot of experience in this field. We know how to put these projects together. We have experience at doing those, bringing those projects forward within our team. We've delivered them, not in Igraine, but in other corporate structures. We've delivered these projects. And so we know what we're doing. We know how a project has to work. We know what is required to get that project to a situation where somebody can make a profit and do what the project is supposed to do, which is conserve energy. So we understand that. We've got a good industry background. We've got good corporate finance background. So we know how we want to take the company forward, and we know how we want to grow Igraine. So we think we've got all the ingredients in-house that people can trust for us to take our projects forward. And we've got some very exciting initiatives that we're exploring, on other things that we are involved in. So joint ventures where we would partner with other potential competitors even in the industry, where we can bring innovation forward ourselves. We're not just focused on purely battery storage. We have a background in energy. And so we're looking at other parts of the energy market where, as we develop as a company, we're not just going to stand still. We're going to develop Igraine into something that that grows as we go on and diversifies within the sector, but into other parts of the energy business.
Energy, yeah. So you're an energy play effectively, which is really great, quite a unique offering. And I'm sure I read somewhere, I can't remember where now. I read so many things these days and things pop up, but invest in energy was effectively the message. Energy is the future.
Yes.
You invest in energy now, whether it's, whether you've got loads of money and you can get involved in buying sites, or whether you're a small investor and you can put some hundreds of pounds into a company like yourselves. But I think energy is a safe bet.
Energy is a market that's growing. It's dynamic at the moment. There are big changes going on in the industry, and that means opportunity. When you get big changes, you get opportunity. And there's an important thing about battery storage, which people often overlook. It's the only part of the renewable energy sector that has never had government subsidies. So solar started out with government subsidies. Wind started out with government subsidies. Now, I know there's talk about long duration battery getting a form of government subsidy, but that's different from what we do, which is pure battery storage. And that's the sort of battery, if you want to call it like that, that's based on things like hydropower, which are very expensive to make. So that sort of battery storage, if you want to call it battery storage, electricity storage, does need subsidies to make it work. But pure battery storage is a business case that is profitable and has been profitable from day one without any form of government subsidies. So it's the only part of the renewable sector that operates like that. And so when you look at that as an investment case in a dynamic market, it should give investors confidence that battery storage as a sector is a sector to look at. And now we've got this moving away from basing our business models on PPAs, which some companies started out doing, but then had to unwind those transactions. They've thankfully reformulated themselves into business based on trading as opposed to PPAs. The battery storage sector itself is set definitely to grow over the next, to take us up to 2050.
Well, David, thank you very much for your time. It's been fascinating talking to you. I'm sure we'll be talking again in the future as we see things develop with Igraine. But thank you very much. And Dan, thank you for your time.
Thanks, guys.
Thank you very much.